Hello, I'm Donald Leggett and welcome to Share Views, brought to you by the financial website London South East. Today I'm joined by Peter Reeve, Executive Chairman of Aura Energy, an Australian-based minerals company listed on both ASX and AIM. They have a uranium project in Mauritania, northwest Africa, as well as a polymetallic project in Sweden, which they're looking to IPO in the second half of the year. Peter Reeve, welcome.
Thank you.
And we're going to talk about your IPO first of all, because I suspect that's probably of most interest to our viewers. So you've got a massive deposit in Haggen, Sweden, but the projected value has just shifted to vanadium and battery elements. So tell me more about that.
Yeah, look, the polymetallic nature of the Haggen deposit has been well known for a long period. We've been drilling and testing that deposit for 10 years, and things change. And with the battery metal sector globally starting to emerge as being maybe the most important thing for the next 3 to 4 decades in metals, we found we had a great concentration of vanadium, which was near to the surface. The deposit in our feelings has never really been reflected in the share price of Aura. So we think to do the IPO, spin it out, give it a focused management team, and to also let people see it fund and develop on its own will create a lot of value. And that'll be reflected back in the Aura share price.
Okay, so vanadium and battery elements are
Yes.
suddenly much more important. So over 10 years, initially that wouldn't have been so important, and nowadays that's the major focus.
I go back and say to analysts that 8 months ago, nobody was talking about the battery metal sector, that term, and that's when it was born. So 2 years ago, we didn't talk about the battery metal sector. It's that new. I think it's that important. And when you start seeing the growth of battery storage up to 2030, they're enormous numbers, and I can't see people who have battery metal exposure doing badly out of it.
Yes. So you're Australian-based, I can
Yes.
tell by your accent. Initially listed on ASX, you're now also listed on AIM. Where will the IPO take place? Which of the different listings are you looking at, and how much money are you hoping to raise?
Yeah, we looked at all the jurisdictions. We looked at AIM, ASX and Toronto. We probably focused more on Toronto and AIM as being markets in the Northern Hemisphere and therefore aligned with the time zone of the project. I think our leaning now is probably more towards AIM. Aura Energy is already listed on AIM, and it's close to Sweden as well. So I think there's some benefits in that occurring. We've still got to see the investment activity and interest in the stock to choose the AIM, but probably right now that's the location we're thinking might be best.
Not every chief exec is a great fan of AIM, but do you have any issues with it?
I think AIM has got some conflict of interest issues, and I think the Nomad structure is problematic. In Australia, we are responsible for our listing and we talk directly to the exchange. In AIM, you have this Nomad interface. I don't enjoy that part of it, but it's the rules of this football match, so we play it.
It's the rules of the game, and so therefore
Yep.
you go with it. Okay. So yes. Okay. I've just asked you about the pros and cons of each listing. What do your current Aura Energy shareholders make of the fact that a part of the business with great potential is being spun off? Tell me more about that.
I think they accept that we've never really seen the value of the Haggen deposit reflected in the Aura share price. Shareholders are smart people, and I think when they see the fact that this spin out could potentially have the same market capitalisation value as Aura and will only sell out 20 to 30% of the asset at that IPO, so Aura will retain 70 or 80%, and that will be reflected back into the share price. So I think the shareholders are saying, you know what, the IPO is a smart idea because it gets the asset moving, it gets it developed, and it also gets true value reflected back for Aura shareholders.
Is it too early to ask you how much that 20 to 30% share might be worth?
Look, you can make a case, and we've done valuation cases to show that the overall asset value of a good operating, functioning, pre-development vanadium company could be in the order of $70 to $100 million. Let's start at a number much, much less than that and say 30 to 50 million, and I'm talking Australian dollars. Then I think we're in the ballpark. But we leave a lot on the table for shareholders to make gains if we list it at something like that level. So they're the sorts of numbers we're thinking about.
And where is the Australian dollar against sterling at the moment?
It's about half.
Okay, that's very helpful. Okay, let's turn to uranium. Talk me through the economics of the proposed shallow pit uranium mine Tiris in Mauritania.
Tiris is a fantastic project. It is a 5 metre deep surface deposit in the Sahara Desert. We've done great environmental studies out there and complete. We've just done a resource upgrade and got better results, massively better results than we expected. And now we only have some metallurgical test work, some engineering and some water drilling to do, and we can be finished the feasibility study by the end of 2018. It's a small project, so we should only see about a 1-year development time horizon. We've got sub $20 cash costs. If we go forward and do some offtake sales, we would expect that to be north of $30 a pound, and that should give us a very good, healthy margin to develop the project. Longer term, I don't see uranium in the short term running back to the $60 and $70 mark, but I think uranium can get back to the $40, $50 mark soon. We've seen the cutbacks amongst some of the major producers starting to have an impact. And for the first time, I come to London quite a bit, for the first time in some years now, I think people who have been close uranium watchers and traders are starting to see some positive turns, understanding where the uranium stocks are, and we have seen that 10 to 15% increase in uranium price recently. So I think we're on a good trajectory to see, you know, people with near-term uranium development projects make some gains out of it.
So what's the uranium spot price at the moment? What's the contract price?
Spot price is around about $23.50. It's been wallowing in the 2021 mark for quite some time, and the contract price is sitting up around about the $30 a pound mark.
Okay, and you've seen that kicker of 10 to 15% upwards
Yes.
in uranium?
Yes.
That's the first time in quite a few years, is it?
Look, that caught us all by surprise just in the last few weeks, and that's how it happens. These things lay dormant. The Fukushima nuclear issue caused the fall. Things have been very dormant since then. All of a sudden, wow, the price is now moving. What happened? But like I say, I've been talking to a lot of people, and I think that little bit of activity is backed up with some real positive feelings about the fact that the cutbacks have bitten. People know where the stocks are. Now we need the long-term utility buyers to come back into the contract market, and that can drive the price quickly.
So the producers have actually been very sensible and cut production.
They have, and they've cut it massively. So both in North America and in Eastern Europe, we've seen big cutbacks.
So they've accepted the reality, taken the pain, and you're hoping that the utility buyers now
come back in.
Yeah.
And one of the big points about the uranium price is too that at $20, $21 spot price, it's below most people's cost of production. It's completely unsustainable. It can't last. You can do that for 1 to 2 years. You can't do that for 5 years, or you don't have a sector, and uranium mines and uranium and nuclear facilities, I should say, start to shut down.
Sure. So the nuclear industry needs producers to produce.
Absolutely. They will not run out of stocks. Okay. They need to have those contracts in place.
Now, the one number you've not given me is the cost of developing Tiris in Mauritania. How much will that actually cost you?
It's a the scoping study came out with a $45 million capex. Into the final feasibility study, we might see that move up marginally, but not much. And to produce 1 million pounds per annum of uranium, that's a very cost-effective capital spend.
So you see that project as being viable even at current prices?
Absolutely, I really do.
Okay. So what does the Aura Energy balance sheet look like currently, and will the IPO distract management attention from current operations in Mauritania?
Yeah, we raised very quickly about 3 or 4 weeks ago, about $4 million in Australia. Had some support from our strategic holders out here in London who have been great supporters of the share price and the shares. And so we're well cashed up at the moment to keep our development plans going through this year and into next.
What will you spend that money on, and over what time scale?
We are a very active company, and I have a very active program of developing technical and corporate ideas. So we can see that money being spent over the next year, year and a half. Technical work, a bit on the IPO, but mainly technical development areas and engineering parts to get the study up and going. Okay.
My final question. You've done very well. You've been very concise. But my final question, give me the investment case for both the IPO and Tiris in Mauritania. So Aura
sure.
and the new company.
Tiris is a uranium project. Uranium is starting to spark. Tiris is, I think, arguably one of the best small development uranium projects going around because of its low capital, and therefore I think the return on that project as uranium price moves will be very high, and it's near term. On vanadium, it's a ticket to the dance floor with the battery metal sector, and vanadium's a very interesting metal. I think because it's close to the surface and it's quite modest in size, also the capital won't be terrible, and we could make that in a slightly longer term, medium term period, another great development project. So we've got 2 development projects, and that's not always the case for a exploration and development company.
Certainly true. Peter Reeve, Executive Chairman, Oro Energy, thank you very much indeed for joining me today. And if you found this interview useful, please subscribe for more by Googling London South East YouTube. Thank you for watching.